First what I'm going to do is explain the process in general. I want to go over some facts and figures and review the report. My name is Bill Vasilopoulos. I'm the Director of Real Estate and Tax Services from the Cook County Clerk's Office. And today we're announcing the 2012 tax rates for all taxing districts in Cook County. This culminates a process that started last year with the assessor assessing all the property in Cook County, reassessing the City of Chicago. That was the triennial that was reassessed this year. And the Board of Review, of course, hearing appeals to those assessments, not just in Chicago, but they could hear appeals to any assessment throughout the county. As that's going on during the calendar year last year and in part the first part of this year, taxing districts are also passing their budgets and passing their tax levies. Tax levies need to be filed with our office by the last Tuesday in December. When those levies are filed with us, we utilize those levies with the final assessments to determine what the tax rates are through a rather complicated process of determining first what the assessed values are as finalized by the Board of Review, then multiplying those assessed values by the equalization factor which is issued by the Illinois Department of Revenue, and then finally dividing that EAV by the tax levy to first determine if they have exceeded any individual rate ceilings by fund, and then if they've exceeded the tax cap law in totality. Once we do that, dividing the final levy by the EAV determines the tax rates. Taxing districts are subject to rate ceilings by fund. Those rate ceilings are set by state statute, and it limits a taxing district's ability to increase an individual fund within their levy based on the ceiling times the EAV of the property. The EAV of the taxing district. Also, once we limit it by fund, overall the taxing district cannot receive more than the CPI increase over the prior year's extension plus any new property. The CPI is 3% this year. New property allows them to go above 3%. New property is defined as any new construction that has occurred in the taxing district. That limitation is commonly referred to as the tax cap law, or PATEL, Property Tax Extension Limitation Law. And it's the final reduction that we apply to the tax levy before we determine what the tax rates are. The ability of taxing districts to go above the tax cap law is allowed only with successful referendum or the issuance of bonds that are exempt from the tax cap law. Other districts, like special service areas and home rule districts, are also exempt from any limitations under the tax cap law. Some facts and figures for this year. The equalization factor this year is 2.8056. That's a 5.5% increase over the prior year, which was 2.9706. The county's EAV, consequently, because in part the multiplier went down, and also because the reassessment in the city also reduced the assessed values, overall the EAV dropped 10.5% throughout the county. In the suburban areas, that EAV was about a 7 or 8% drop, and in the city of Chicago, that EAV was over a 13% drop. Now, the reason the city of Chicago went down 13% is taking the 5.5% reduction in the multiplier, coupling that with the reassessment that occurred by the assessor, reducing the assessed values throughout the city of Chicago. In some cases, especially out in the neighborhoods, by 15 to 20%. In the downtown central business district, it only went down 7 to 8%. And we'll get into the effects of that in a little bit. Just because values drop doesn't mean taxing districts are going to receive less money. Under the tax cap law, they're allowed to increase their levy, as I said before, by the 3% CPI, which was the CPI utilized this year. That's an increase over last year, which was 1.5%. Next year, the CPI, which we already know since it was issued in January of this year, the CPI to be used is 1.7%. So over the last few years, 3% is a little bit higher than the average, although if you average out the CPIs since the tax cap law was applied to Cook County, the CPIs averaged about 2.5%. Sometimes as low as 0.1%, and the highest was 4.1%. Even though assessed values did drop, not only, as I said, taxing districts aren't necessarily reduced in the amount of money they can access, likewise, because your assessment dropped, that does not mean taxpayers are also going to be paying less. They could be paying less, they could be paying more. It depends on a variety of factors. Overall, this year, the extension is $11.9 billion, almost $12 billion. That is all the taxing districts, tax extension amounts, the amount of money that they're extending over all the taxpayers is close to $12 billion. Last year was $11.7 billion. So that's an increase of 2.2%. As I said earlier, the CPI was 3%, which makes up the vast majority of that. Obviously, some districts are not accessing the full amount that they could under the tax cap law. That's why that figure isn't any higher. District's cap this year is 350. That is down from the 387 number from last year. Overall districts, the maximum, the total number of districts that are eligible to be capped are about 450. So about 350 of them actually did get capped this year. By far the largest district that got capped was the Chicago Board of Education. The next largest was a few school districts, but that's traditionally the case. Chicago Board of Ed, since their levy is over $2 billion, they got capped a few million dollars. Consequently, they are the largest, but proportionally speaking, it's not that big since their levy is $2 billion. And the $12 billion, almost the $12 billion of taxes extended is extended by the 1,500 taxing districts that we have in Cook County. There are 550 core districts, and the remaining districts are special service areas and TIFs. Some of the highlights for this year. As I said earlier, the multiplier went down 5.5%. The city of Chicago was reassessed, and that reassessment varied within the city. Overall, the EAV went down 13% in the city. But if you look at the numbers more carefully, the Central Business District only went down about 7.5%. And the residential townships within the city outside the Central Business District went down anywhere between 15 and 20%. Obviously, that creates some movement within the property tax burden within the city. The primary reason is that the reassessment done by the assessor on the commercial industrial base they did not reduce the assessment as much as they did in the residential properties throughout the city. The 7% homeowners exemption is sunsetting now. We've been discussing it over the last few years. This is the first year that it's sunset completely within the city of Chicago. And it is the first triennial area to have that 7% homeowners exemption sunset. And it will be phased in, that sunsetting, next year to the north and northwest suburban areas, that triennial area, and then finally to the south and southwest areas. The homeowners exemption, the minimum homeowners exemption was increased this year from $6,000 up to $7,000, and that is EAV, off the taxable value. In the north, the maximum this year is $12,000 with a minimum of $7,000, and in the south triennial area, the maximum $16,000. Its minimum, of course, is also $7,000. And as I said, next year the north will be phased out, and then the year after that, the south will be phased out. Also, the senior citizen exemption changed from $4,000 of EAV reduced from the taxable value of a senior home down up to $5,000. So both the minimums of the homeowners and senior exemptions were increased by $1,000. Any questions at this point? Otherwise, I'm going to go over the report.
So for the city taxpayers, it's the sunset is completely in effect for this.
The 7%, which phased taxable value on a parcel over time. If it exceeded an individual increase of 7% per year, it would be held back, and then that additional value above 7% would be phased in subsequent years. That is all phased out now, and all the taxable value in the city residential areas that had been held back is now on the properties in the city. The reality is, though, that for the majority of taxpayers, they were already at that level last year or even the year before. Last year, almost 70% of the residential properties were at the minimum, which means it had been phased back onto the property for 65-70% of those residential properties last year. So this now is the remaining portion that had been receiving a greater benefit than the minimum. They now are at the minimum with any held back assessment being put onto the property.
What do you think about the 7% freeze? Did it work? Did it keep property assessments down now that you've seen it fully cycle in and out?
Well, it did keep assessments. It kept assessments down for a short period of time. Eventually, that value is just withheld and delayed from taxation. So in that sense, if that was the intent of it, sure, yeah, it did work. Now what happened, though, in addition to the big jump in property values, and the reason why it was phased, and the reason why many people were at their minimums last year, that it was kind of phased out for a lot of people even last year, is because property values dropped. So, the values went up, but then the values came back down, and now there's less value to be added on because the property value for the last couple of years has been going down.
It's Dave Roeder, Chicago Sun-Times.
Yes, go ahead.
You say 3% increase will be typical for suburban property owners. Can you be as specific for Chicago property owners? It looks like most of the city homeowners are going to see some sort of an increase.
The 3% I was referring to is the 3% that taxing districts are allowed to increase their levy over. That will translate in some increases in the suburban areas, but how that translates depends on their individual exemption amounts. In the city, not all the taxing districts, and we're going to go over some of the numbers right now, not all the taxing districts in the city availed themselves of that 3% increase. So the increase within the city in terms of the amount that districts accessed this year is less than 3%. But the bigger driver of what's going to happen to what's going to happen to properties and their tax bills this year is the assessment within the city. And on average, the residential properties saw a much greater decline in their value than the commercial properties. And what that will result in is a bit of a movement away from the burden on residential properties and move towards commercial industrial properties, especially in the central downtown business district.
Okay.
So I'm going to go over some of the facts here that's on our press release and go over some of the specific numbers. The document that you have in front of you, entitled 2012 Tax Rate Report. The first page is the table of contents. The next few pages are Roman numeral numbers, which itemize city information. So the first three Roman numerals, 1, 2, and 3, are the individual city rates, taxing districts that are within the city of Chicago, comparing last year's rate to this year's rate and the percent change. Roman numeral 4 issues a composite tax rate, accumulating the taxing districts on a typical tax bill in the city of Chicago. Broke it out into 3 sections. The top section is an average tax bill. Okay, and you can see the percent change of all the tax rates that are on a typical bill in the city. It went up 17%, a little over 17.25%. The next section there is property within the South Cook County Mosquito Abatement District, which is in the southern end of the city. Its rate is a little bit higher than the rest because of that additional district, and it just gives you an example of how that impacts a tax bill on the people in the southern end of the city. The final section at the bottom is an illustration of a special service area and how that additional tax for a special service area and how that would be applied, comparing last year to this year. Okay. The next page, Roman numeral 5, is a pie chart illustrating the distribution of the money within the city of Chicago. As you can see, Board of Education is about 53% of the average tax bill in the city, and the rest of the figures are proportionally laid out there across the city. The next page deals with a sample calculation on how we get from assessed value to the amount that is paid, the amount that is billed, I should say. And we take, for example, the city of Chicago, we take the assessor's fair market value times the 10% assessment percentage, and we're given from the assessor that assessed value of $20,000. So this is an example of a $200,000 home. Their assessed value is $20,000 times the equalization factor issued by the State Department of Revenue of 2.8056. Gives us an EAV. We subtract from that EAV the homeowner's exemption in this example. This is where you would also subtract other exemptions if it was a senior. To get the final taxable EAV, and we apply the final tax rate of all the taxing districts to that tax bill, to that EAV, to come up with the final tax bill. So that's a way the calculation works. In the north suburban area and the south suburban areas, I apply the same formulas here. The differences are, in the north, I used a homeowner's exemption of the maximum they could receive of $12,000. In the south, I use a homeowner's exemption, the maximum of $16,000, and I just took an average tax rate of 8.00. Obviously, in the suburbs, the rates vary tremendously. They can be as low as 6 3/4 up to in the teens, with some tax rates in the high 20s and even 30 in areas in the south suburbs that are that don't have a lot of value, that have not any land that has appreciated in value, and it has kept the rates very high in a few south suburban areas. The next page deals with the EAV and broken down by Cook County in total, the suburban townships portion, and the city of Chicago. And these are some of the figures I mentioned earlier. You see the county's overall EAV down 10.45%, the suburban EAV down 7.82%, and the city's EAV down 13.14%.
Okay, Bill, just to interject for 1 second, please point out that in the back of the press release, there's that key facts. That has a lot of these numbers pulled out in one chart for everybody to see.
The final page of the city section, Roman numeral 8, is a tax extension comparison. Taking the major taxing districts in the county and comparing last year's extension for those districts to this year's extension. You can see those districts had an increase, this is at the top portion of the page, of 1.96%. If you look at the numbers individually, you see the big driver there being the Chicago Board of Education going up 3.38%, and also the School Building and Improvement Fund, which are bonds that the City of Chicago takes out on behalf of the Board of Education, going up 6.5%. Those school bonds are a fixed amount of bonds. They have levy schedules that stretch over a 20-year period, and those amounts tend to fluctuate up or down depending on what the levy is in each given year for that bond. The portion toward the bottom of the page is the portion of the extension of those major taxing districts found above that is extended over the City of Chicago taxpayers. And for the majority of them, it's the same because the majority of those districts are city-only districts. But for the top 3 districts, the County of Cook, the Forest Preserve, and the Water Reclamation District, those districts stretch across not only the City of Chicago, but throughout the entire county. That's just the City of Chicago's portion that they have to pay towards those 3 districts. And the total increase of all those taxing districts is 1.84. Again, the big driver of any increase, since if you look at most of those numbers, the numbers are relatively flat, is the board's increase. The Forest Preserve, as you note above and below, actually went down 2%, and its portion of its levy on the City of Chicago, that responsibility went down by 5%. The rest of the report is our suburban rates. We'll just go over 1 or 2 pages so you can get a feel for it. The first one here is the Township of Barrington, and what's listed first are all the districts located within the Township of Barrington. Again, comparing last year's rates to this year's rates and the percent change. Flip over to the next page, the Township of Berwyn. Again, the same thing. And underneath each one of the individual lists of taxing districts is what we call our sample composite rates. And what that does is it lists a municipality within that township and takes a composite of all the tax rates that will be on a typical tax bill of that municipality and accumulates it and compares that total composite rate to last year. And the way you read this, looking at the town of Berwyn, we have the City of Berwyn, and as you can see, we've itemized 2 different tax codes and tax rates there. City of Berwyn is divided between 2 school districts, School District 98 and School District 100. So this is an easy way for a reader or taxpayer to look at where they are located in the city, because they typically know what school district they're in, and find out what their individual rate is. As you can see, depending on the school district that you live in within the City of Berwyn, your rate will be different. School District 98's rate, along with the North Berwyn Park District, that cumulative rate of all those taxing districts is 12.019, and School District 100 and the Berwyn Park District, that's rates 12.337. So you will find those examples throughout the rest of this report by township, listing each of the municipalities that are found within those townships and giving a typical tax rate for a taxpayer within the municipality. And as Courtney said, at the end, we have our quick facts information that I have been giving out, comparing last year to this year on a variety of bits of information that we've already discussed. So in case you missed it, you can go back to that. That concludes my remarks. Are there any questions?
Are these will be reflected in the first installment tax bills next year?
No. The first installment of this year was already issued, and the first installment was due March 1st. That was 55% of last year. No calculations were done other than to take 55% of last year's bill. What these rates they're utilized to calculate the full amount to be paid for this year, the 2012 year, which is billed and collected in calendar year 13. Once we determine the total amount that is due for a taxpayer utilizing these rates, we then subtract what was already billed in the first installment and due March 1st. And the balance will be billed and mailed out at the end of this month, and it'll be due August 1st.
So if the mayor wants to go above the tax cap for the city schools and he gets something through the legislature, how does that work?
Well,
What will change?
all taxing districts have an option to get around the tax cap law, and that is to have a referendum for all the taxpayers. Propose a referendum. It can be done in any of the elections. And it would propose to It depends on the type of referendum, because there are a couple of types, but typically the referendum used is to increase the limiting rate from what would typically be used to a set rate, and that would allow the district to access more money. Any changes to the existing tax cap law would have to, that's maybe what they're proposing to do by going down to Springfield. But under the current tax cap law, there is an avenue for all taxing districts to go above the tax cap, and that is referendum.
But that wouldn't apply to this year.
Oh, the application you also asked about, yeah. The soonest it could apply would be for the 2013 tax year, which would be billed and collected in calendar year 2014. That's if they have a referendum next spring. It could be retroactively applied to the 2013 tax year. There is no election this fall, so the soonest election would be next spring, and they do have the ability to designate the tax year it's applicable for, and it could be applicable to the 2013 year. Billed and collected in calendar year 2014.